Good weekend. Ira Epstein with your financial market wrap-up. And this wrap-up is for the weekend of Friday, the 14th of April, 2023. And we'll be looking at weekly charts here. Now, an interesting week all over the board. And while you had a big down day today, I don't even know if it was that big in the stock indices. Overall, it's been a week where this market was just on flight control, going higher and higher and higher. And this pullback, I don't know what it does. I'm excited about the break in the gold market. I wanted to see a big break. I'm getting it. I don't think gold's over on the upside. I think that Friday, profit taking, whatever, a crowded trade. You heard me say every day here that I thought gold was a crowded trade. It's not crowded. When you drop $45 to $50, you've knocked out the week longs typically. Copper didn't do very much today. The dollar, a nice bounce in the market, about 20 off the highs of the move. And we're starting to add back yield. Yes, yield into the bonds and the notes, because I think the market's coming to the realization, at least I'm of the opinion, that the Fed is going to add a quarter point at the May meeting. They'll go data dependent and see just how sticky that inflation is. Remember, core inflation is sticky. 5.6% is sticky, my friends. You can take the headline down from 9 to 5 to 4.5 to 3. But if you keep that core up there, that's the Fed's indicator. Keep your eye on that one. In the grain market, drought, rain, too much of this, too much of that. It's going to be a wild planting season. It just began, so you buckle in. You know, we're so used to April being cold. In Chicago, we're in the 80s. They're talking we may snow on Monday. I mean, I'm cracking up from it. But we are setting records in heat. And it's not a one-day event. It's been this way all week long. All the plants have bloomed, and we normally don't do that at this point. It's the April showers, the cold weather. It got beautiful. The cafes, I saw some cafes had people outside. I don't know how their permits work with that. Most of the time, you can't do it. All right. So you look at that, and you look at the energy. So today was a big break. I have rolled my clients now into the Junes. So now, instead of May, I told them to come out of the May today into the June, and that's what I'll be following there. So when we go to the monthly chart of just closes, not highs and lows, you can see how the market for the first time, and this is the first time so far this month of March, that we are up to the 18-month moving average. The month's not over. We're halfway into it. I don't know if it'll stay there or not because it's a close only. It's over that number by 16 points. That's very little, as you know, in the S&Ps. But the market's come to the resistance area. On the S&P 500, the close-only chart, and I'd like to see what those are. The bias stays up because you've been over it for a while, in fact. Certainly, the whole month of March, you climbed back over it, and you stayed over that, and you're continuing that pattern. Then we get to the bar charts, and we've been here, we've done that. Just visually, I take a look, and I said, we peaked there, we went a little bit higher one time, came back about right into here where we're at. So to me, just visually, we're in a resistance area. No more than that, just visually easy to see. I then see what the chart is doing. Well, I have a pattern of a higher high and a lower low. To me, that is not a trend. A trend is made up of higher lows, higher highs. But what is the pattern? Well, if you look at it, once you made your 38.0875, each and every week since then has made a higher week. For me, that qualifies as what I call a vertical price move. Are they easy to catch? They're near impossible. Why? Where do you come in? Not getting a break under a previous week's low first. Haven't done that. It's forcing you to buy higher. Where do you put a stop? Back under that low? You got to make up your mind. At some point, where's your momentum if you're using that type of entry? The next thing I look at, no, I don't like this at all. Each time we have recently come up to the 100-week average, the market has failed. Yes, you got over it here for 3 weeks, and then you came right back under it, challenged it, and came apart. Well, here we are doing it again. So would I go to the well and say the fourth time, the third time, whatever, it's going to bust through? No, I'm not in that camp at all. Am I bearish? No, I don't want to play. That's a guy like me. When I have to come in an area that is a resistance and you couple it with the Bollinger Band and you got a real lot of resistance. Why? Markets don't trade outside of Bollinger Bands more than 5% in the aggregate. And if you and I take a look, you hit the band there, you fell apart. Let me come back here. Hit the bands, didn't go anywhere. Hit the band, yeah, you went under it for one part of the week, came back. Hit the band, came back. Are you getting my point? You can go through it and make it work to the point where if you want to look at it, maybe you can find something you want to hang your hat on. I can't. And the one thing I don't do, and this is so important today, I was hearing Carter Worth today say something on CNBC maybe 30 minutes ago, and it was bright. And what he said is anybody can take data on a chart and make it do anything they want. And that is the darn truth. I applaud him for that. Very, very well said. Because I've seen people do that. They'll take an instance and they try to say that is the norm. No, the norm is just what I'm showing you. That is what the algorithm is built on. Markets will trade 95% of the time within them. Why do I want to then buy into the resistance? That's my thinking in my head. In terms of momentum, whether it's on a daily or a weekly chart, markets get momentum up, down, overbought, oversold, and they can embed. What makes Bollinger Bands with this so unique is the combination of the two. If you get the red and the blue lines going sideways over 80, it says you're getting even stronger. When you lose the red under that, the market's telling you often, momentum's ahead of price, by the way, that part of the game is over, and look what happens. You start the roll. That's what I use momentum with price. And it really does a better job on this, on daily charts than weekly charts, because they make up, 5 days make up 1 week of this. So it's really an interesting point. But as I look at the market over and over, it comes up to these high points and the market turns back. That's all that I can see. So therefore, no trend into the resistance, momentum overbought. We then get to the Dow, and the Dow got to the Bollinger Band and flipped itself the other way on you. Got to the Bollinger Band, flipped itself on the other way. It hit it here, got back over, hit it, got back over, made a run for the upside, couldn't go anywhere. So maybe this is that time where it's going to go to the upper band, but without me on a weekly basis. Why? Once again, a lower low, higher high, every week straight up, and you're back into a resistance area that's fairly thick right here. Remember, these are weekly bars. You're into a resistance. This does not mean it can't go higher. This does not mean I can't become a bull down the road. I can't be one right now. Not a bear either, so don't say, oh, he's always bullish or bearish. I'm nothing right here. In the NASDAQ, no. You get up to the 100-day average, 100-week average. When's the last time you saw a 100-week average? How many weeks in a year? 52. You have almost a 4-year moving average, and you want to buy into that. Somebody's doing it, saying it's going to keep going. No, it isn't. The odds strongly favor that those that follow moving averages are going to say what I'm saying. Now that's a resistance zone. Example, you fall back to it. It plays with it as support. Then it comes up. Later it can get through it. And if once it gets through it, what was then the support becomes resistance on the way up, and you see that right here. That's how you start looking at the charts. Well, I'm looking at a market rallying into a resistance point. Is it embedded? Okay. Both numbers are over 80. That is one leg of being embedded. You need to get 3 of those together. The week before, both numbers are over 80. What about the week before? Nope. And with nope, that means you're just plain overbought. Now, could it embed this week? If the market has a strong week, absolutely. Then I'll have a different hat on, and guess what? Then on pullbacks, I'll be telling my clientele, I think you have to be a buyer on the break, but we're not there. So I wait, and I wouldn't be able to say that until the week is done, and that would be next weekend. In the Russell, you're just rallying into a resistance area. Lower highs, lower lows. You have the 200-week moving average, the 18-week. You got a lot of resistance right there. It's difficult to be shorted. Why? Because you're in oversold territory. My definition of oversold is anytime the slow stochastic readings are underneath 30. They're oversold. Anytime they're over 70, they're overbought. Both numbers going sideways under 20 for several weeks or more, or over 80 for several, they're embedded. I teach this in the course. It is so easy to learn it. You will start looking at it and you're going to go, whoa, I think I'm onto something. Because how often have you wondered on a chart, it gets a big move, where's a spot that maybe I should take money off the table? I'm not saying this is always the spot. I'm saying it's a darn good one to learn. For me, it is. In the 30-year bond, well, you get up to that band, you got your resistance, you're overbought. I'll let you buy it. I don't want to buy overbought markets or tell my clients to buy overbought markets into a Bollinger Band, period. You do it. I wish you the best. Then we get the 10-year note, overbought into the Bollinger Bands, and they stop just like magic. If that weren't on there, you'd go, what's stopping the market? I think you'd agree with me. In the dollar index, I'm the super bear. I'm the guy that 2 weeks ago put out the video report to be bearish on the dollar. And here it is. And guess what? I'm telling my clients, no, you take money off the table right here. If you're on this, if you are in it right now, why? You're at the Bollinger Band 100-week average. No, and you're oversold. You take money off. Does that mean you have to give up your whole position? No, but you've got to take money off if you've got a lead in the market, in my opinion. That does not mean you follow me. I am not your broker. I am just another market analyst. In the eurocurrency, we are up and over the Bollinger Band. Only 5% you stay over it. Does that mean I'm bearish? Absolutely not. I'm super bullish in the euro, the Swiss franc, a number of the markets, but they're overbought. They're here. It's not the terms I want to be into the market on the weekly charts. The dailies are also overbought. Okay? Canadian dollar, bullish. Outside week to the upside. So unless this week is taken out, this week's low of right now, next week or the week after, the odds favor this a continuation pattern that should go up ideally, don't know if it'll happen, and one of the numbers to be looking at would be the 75-60 level. Right now, that's the upper Bollinger Band. That number will change a little bit, but not dramatically, and that's what I'm looking for on the resistance, with support at the 18-week average. In the Japanese yen, on a weekly basis, I'm bearish right here. Lower highs, lower lows, momentum pointing down. Prove me wrong. You have to get back up over that high. Target right in here. I don't think Mr. Ueda, I think that's the name, I've got to learn this, okay, is going to make a policy change anytime soon. He's just getting into his position. They're looking at a lot of data. I do think under him, you will get away from this easy money policy, but let's listen. Generally, central bankers give you signals. You've got to listen. They're subtle. We'll see what happens. I doubt he's going to wake up one morning and call me on the phone and say, Ira, I'm about to do it. I don't think that's going to happen, that he's going to say it to anybody, but that's where you're at right now. What the market's really done is it hasn't made anybody money. What do I mean by that? You haven't hit an upper and lower Bollinger Band since back at the beginning of the year. You've just been doing one of these waves. Either side of the market makes for a sort of boring trade. I wouldn't be using the weekly chart off the trading. I've noticed that pattern. The daily's a better chart. In Bitcoin, still bullish. All right, the market is up and away. Did it embed? Both numbers are over 80, both numbers over 80, both numbers over 80. You're embedded. So what do I expect of the pro? I expect the pro under the rules in my course, and I'm not giving you the rules here. I expect him on the pullbacks to be buying the market under the specific rule. There's one rule that you will pay attention to, and I'm not giving it to you here. I want you to get the course. As you can see, the market has stayed over the 200-week average, and it's done it now for better than a month. So now I look at this number to be the support on the pullbacks. You're embedded. The resistance is right here. Nothing takes away from the Bollinger Band being the resistance point. the Brent versus the WTI crude, just the way that I said it on the dailies. If you look, it's at 379. We've been saying it's hanging in the 4.25 range, still basically there. The market's got a pattern on the weekly chart where it found a bottom at the 200 week, the first challenge. Big moving averages are so important. That does not mean this was the buy signal. This was the area right here, in my opinion, that if one were short, that was where the shorts were doing their covering. I don't see how you got a buy signal out of it. There's a huge difference between saying, I want to cover shorts, I don't want to be as short, I don't want to be short, versus saying I'm going long. They are not the same thing. And I don't see anything here. I see a higher high, lower low. I see the same thing in WTI, came down like that. We know why the market rallied as much as it has. We know that OPEC Plus got together and they pulled the rug out from everybody. And what they said is, hey, we're going to control supply to control the price that you pay. If demand slips, we're taking even more supply off the market. You have to have a certain amount of it. Now, will there be cheating? Will this work? In theory, everything works. Will there be cheating? It's a guarantee. Look at the history of OPEC. They'll say to themselves when it really comes time that maybe we got to do another cut if things aren't working, the other country will go, I'm with you, I'm with you. How you counting my barrels? They're going. And then because you want to keep them in the cartel, you turn the other eye. You say, you can't keep doing that. And you got to turn your eye because you got to keep the cartel together. That's basically what it is. In America, these people would all go to jail. It's price rigging, right? It's price rigging any way you want to look at it. Rebob gasoline. Okay, we are at a point right now, right here, and I'm the big bull, where you've got to be cautious now. The 290 level is an area, you haven't hit it yet, but you're within 50 cents at the highs of hitting it, where you're starting to get that resistance. Now, the good news is you're at 12-year lows in gasoline stocks. Alfred, thank you. He's one of my subscribers. He knows more about the fundamentals than I'll ever know on all this, by the way. And he writes me, sends me great graphs because that way I don't have to read so much. And I'm seeing, and he cuts out paragraphs. And I love that. I love when clients give me information that's good and I see it. The problem for me is I'm really not a fundamental trader. I am a chart guy. I don't care what the name of the chart is. I prefer you throw it off. In my course, one of them, when I teach, I take the name off the chart, then I show you what they are. Do you know why? Because you'll have a preconceived idea. You can't get away from yourself. You're going to tell me, I love gold. You will never say, I'm going to take some money off the table. Gold bulls are always buying, and they'll say, you weren't buying back then. Of course, when the market was at 2,000 and went to 1,400, they weren't saying anything. They were still holding because they believe in it long term. I don't want to be that guy. That's for somebody else's method of doing this. I'm a chartist. And as a chartist, I'm looking for the thrusts in the market, and that's all it's worth to me. I don't want to be married to anything. This is still bullish. You're getting rich in price. You're overbought, and that's the resistance point. So you put it together. You try to come up with the game plan, and you learn the different tools. I am telling you, the way that I put this Bollinger Band course together, you'll master it in a weekend. It's quick. How do you get it? Take a look right here. It's on our website. Go learn something. I'm Ira Epstein. You take care. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, If you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.